Welcome to No Fluff, Just Ideas. This is your host, Sophocles, and we're going to be discussing investment ideas from around the world. So buckle up and enjoy. This podcast is for educational purposes only. Full disclaimer at the end of the podcast. Okay, I'd like to welcome Marcel Gozali. I met Marcel in Clusters in 22 and then invited him to my event in Cyprus. Marcel's a CFA charter holder. He used to manage a fund. He's a Columbia graduate. Now he's managing his own money. Welcome, Marcel.
Hi, Sophocles. Yeah, thanks for having me today. I'm excited for our conversation.
Yes, I'm excited too because you have a really, really interesting idea out of Spain. I don't even know how you pronounce that. Grupo San Jose, I think, is like the easiest way to refer to it then.
Exactly. I don't speak Spanish either. I believe it's pronounced as Grupo Empresarial San Jose, and I'm pretty sure I'm not saying it right either. So Grupo San Jose, or the way that its ticker is referred to GSJ, would work just fine.
All right. So what's your why don't you give everyone the elevator pitch?
Grupo Empresarial San Jose is a construction company based in Spain. The construction business is exactly what you think it is. Mature industry. They bid for projects. Anything that they can do in-house, they do. Anything they cannot do, they outsource like any other standard construction company out there. So what is interesting about this company is this. So the market cap is about 375 million euros today. Now, it's net cash. Cash, net of both short-term and long-term debt, is also 375 million. So it's trading at net cash right now. The last 12 months free cash flow was 150 million euros. So that means it's only trading at about 2.5 times last 12 months free cash flow. So that's very cheap for a business that has transformed radically since the euro crisis. The ROE is about 16% right now. This company shouldn't be trading at such distressed multiples. And on top of this, the company has some hidden assets on its balance sheet as well. It owns a 10% stake in the largest private urban real estate development in Madrid, and it also owns plenty of undeveloped land in Argentina and Paraguay. So, even if you ignore all the other hidden assets on its balance sheet, the core business should be trading at about 7x free cash flow. From my estimate, is 2.5 today. And if you include all the value of its hidden assets, it should be trading at about 3x its value today. So that's the pitch, and we can go right into it.
Okay. Let's talk about the operating company because I was reading a little bit of its history. I think they also went through some bankruptcy, a little bit of shift in their business model. Can you tell us about the operating company?
So I think historical context for this company is important. So like all other construction companies, this company doesn't earn higher margins. We're talking about low single digit margins right here. Even if you're talking about the 10 billion, 20 billion dollar peers, you're also talking about mid single digit margins right here. So the important thing to learn is that this company focuses mostly on Madrid right now in Spain. So not does work in other cities, but the focus here is on Madrid. So you can split the history of the company into pre-GFC Euro crisis and post-GFC Euro crisis. So pre-GFC Euro crisis, the industry was unpredictable. There were many such construction companies, and a company like GSJ actually does all kinds of construction, like a lot of its other smaller cap peers as well. They don't really focus, say, specifically on residential buildings or non-residential hotels or infrastructure buildings, bridges, and things like that. Because smaller cap companies tend to have lesser choice of projects, since in order to ensure that they have sustainable recurring revenue, they tend to take all kinds of projects like in. So I call them sort of a generalist, like a construction company. So pre Euro crisis, pre GFC, the industry was as terrible as you think it got to be. Low single digit margins, low returns. There was corruption in the industry. Um, Construction companies don't have much bargaining power. All the customers can have it. So customers will wait for months. Customers will wait for months before paying these construction companies. So you're talking about GSJ taking maybe 180 days, about 6 months to turn over its cash. Now, here's where the interesting thing comes in. Post Euro crisis, everything changed. Everything changed. So post Euro, so what happened during the the GFC and Euro crisis is that a lot of highly levered construction companies with low single-digit margins were wiped out from their existence. A lot of peers went bankrupt. So there are fewer construction companies left right now that actually focuses on Madrid. And at that time, because the euro crisis wiped out so many leverage companies, the construction activity in Spain and Madrid grounded to a halt as well. So all the larger ones, the 10, 20 billion market cap companies, all left Spain and Madrid. They decided to focus more on North America, where construction activity was more sustainable at that time. So if you look at the larger cap companies like ACS, today, most of the revenues actually don't come from Spain. They actually comes from North America. So post Euro crisis, fewer companies survived, and it absolutely changed the dynamics of the industry. Customers went from waiting to pay construction companies to paying them upfront. So the cash conversion cycle actually turned negative for the survivors like GSJ. So GSJ also made many mistakes that its peers did. It was highly levered going into the crisis, and it almost got destroyed. But it was turned around by the current CEO of the company, Jacinto Rey, who also owns 50% of the company. He he has been CEO for 45 years at the company. So this company is a majority of his net worth. So in which case, if you just compare, just take like say average return on capital pre-crisis and average return on capital post-crisis, you will see that it turned from 1 to 2% ROC to about 10-11% today. That's how big that change is. And again, I've mentioned that the working capital cycle is a very telltale signal on how the dynamics of the industry has got shifted. It used to be GSJ waiting to get paid to it being paid upfront today. So those were some of the interesting indicators that I first saw before I delved deeper into the company.
Okay, so Jacinto Ray Gonzalez, was he the founder of the company?
So no, so he became CEO in 78, and he started out as an employee in the company. Now I tried to dig for articles that spoke about how he became CEO, but I guess it was too long ago, so I didn't manage to find anything of that sort. Given the way that he manages and invests capital of GSJ, I am inclined to believe that he bought a majority stake when when GSJ pre him as CEO went through a liquidity a crisis or
Mhm.
even a near a default risk in the late 70s. Because you would think that early 70s was like the high inflationary period, right? So that must have sort of affected Europe, probably did affect Europe at some point. And I'm sure at that point the company was a lot smaller too. So he probably he probably saw the opportunity and bought a majority stake at that time. You know what? The original founding Avalos family still owns a 15% stake in the company.
Okay. Or maybe he picked up a big stake. Wasn't there a bankruptcy 2014 or something with this company, or that was a near bankruptcy?
There were fears of it, but they didn't actually went through the default
Okay.
process. I mean, they were 40x levered at that time. 40x levered. Going into the Euro crisis where business almost halted for every construction company at that time. So they went through a near default, but they didn't actually went through a formal restructuring process from my read of it.
So, is there anything you've discovered about, um, the CEO that you think is important about, just for us as investors?
Sure. So I think that quality of management is obviously important, right? Especially for a company that has that functions in a very mature industry and delivers sort of like a commoditized service, right? So first, Jacinto Ray is a very private a person, so you probably don't see actually that many articles about him. From my research, there are more articles about his boat than him himself. That's how private this person is. But I think there are a few things that we can infer from how he has managed the company. So first, I think he's somebody who um he's somebody who learns and adapts to the situation, but he's also human and he's prone to error. So we can definitely say for sure that because half of this company, because he owns half of this company, so this makes up the majority of his net worth. He owns a smaller company that's listed in Argentina, which is one of the hidden assets that we will go into later. But this is probably the largest asset that determines his personal net worth. So I don't think that as a majority owner, where his kids are in line to succeed him, and procedures have already been in place to succeed him, if he does retire, he's not going to do anything to sink this ship. But despite that, he, like everybody else, was also highly levered going into the Euro crisis. What was different about him is how he revived the company post crisis. He sold off projects that he couldn't take, paid down debt as quickly as he could, so he effectively shrunk to grow. None of his peers did anything close to this. They hung on to projects and eventually went into a default. So he shrunk to grow the company and as well as improve its returns and lower its leverage. So I would say that based on his past, based on the past 10-12 years emerging out of the Euro crisis, he appears like a competent a manager, in my opinion. And he's also somebody who invests as well. So he will buy stakes in projects that seems like nothing at that point in time, but many years down the road, a decade or two later, those assets are things that everybody would have wanted to buy. So he definitely has great foresight and vision in investing, which I think we'll go into later when we
Yeah.
touch on the hidden assets.
Well, one thing I noticed is, they've practically tripled revenues in the last 10 years. Is that all done? They had about 465 million revenues, 2014.
Mm-hmm.
2023, it's
Mm-hmm.
1.3 billion. Is that all organic?
Yes, I would say. I mean, I'm sure that they do some small M&A here and there, but nothing major to report. So what happened was, I think um a lot of it actually was driven by industry tailwind, because as I've said, pre Euro crisis, competition was really intense. So many of the smaller peers went bankrupt that the competition was so much less intense that dynamics improved almost immediately post Euro crisis.
Okay, so it's not that they're doing anything particularly special. It's just that they've I guess been able to execute in less competitive industry,
Exactly.
and like you said, this is pretty thin margins. I'm seeing like operating margin is around 3% last 2 years, and even looking back, I see 2, 5, 4, 3, 4, 1, 2. So very low single margin business, which benefits from some negative working capital from people giving them money up front. And I think also that's also has to do with why they actually had such a big free cash flow last year, right? The the 100 million was because of the working capital rather than generated from the company. Like if we look at just the company itself, they make about 40 million in operating profit.
Yeah, you are absolutely right. Really. So, if you look at the company on a PE basis, it probably trades at right about 10x last 12 months PE right now. Free cash flow wise, last 12 months is probably at 150, and as you have correctly identified, a lot of it was contributed by working capital. So I'm not exactly sure how much I got credit that we should give working capital, but we should at
Hmm.
least give it some credit, really, because this is not a one-time occurrence right here. The negative working capital, which positively contributes to cash flow, has been happening since 2015. So there is a track record there of the industry and the company behaving this way. So I'm apt to believe that we should give some credit to the positive effects of the working capital cycle, but we probably should not underwrite the free cash flow to be 150 million, right? The real answer was probably between like 100 to
Yeah.
150, right, in my view.
So because it doesn't really matter that much, I think at the end of the day, because even if we, we say, operating profit is 40, 45 million,
Mm-hmm.
and we ignore working capital, and we look at depreciation, capex is offsets each other, right?
Right.
So let's say you're left with 40, 45 million, right? And you assume zero growth, and this company's growing, so I'm being really strict here. Assume zero
Right.
growth, and you put a 10% perpetuity on 45 million, right? That's
Mm-hmm.
450 million. And we said the company, is what, EV of 400 million. So just and this is not taking into account cash, not taking into account all the assets. So, and this is what I think makes this like even more interesting, is that you have the operating company, which if the cash disappeared and all the hidden assets disappeared, it's still not expensive.
Yeah, yes. So I think you outlined the thesis quite correctly. I got right. Our first the first pillar of the idea is how much is the core business worth, right? And for a business that generates between 100 to 150 free cash flow, um, I'm not sure that you should just value it at 350 million market cap or 35 million EV. Really, a 35 million EV just sounds too low for a business like this. And that's your first pillar. And your second pillar is all the hidden assets. And he has three of them. And so yes, I think that you outlined the thesis quite correctly. Well, I for one hope that the cash doesn't disappear not overnight. But we should assume that the cash build looks like it will continue right now. So if you just track the stock price, right, for the past 2 years, the stock price has tracked neatly with the value of its cash bill, really. So for almost of the past 2 years, the market thinks that all the hidden assets are worth zero, the core construction business is worth zero, and this company is only worth the value of its net cash. So, uh, again, like you said, sounds like a very exciting idea.
Why do they have so much cash?
I think if I put myself in the shoes, right, of Jacinto, Ray, I feel that he was scarred by the crisis. He was scarred by it. So it was a time when he and many others were running out of cash. And if you think about it, it wasn't even that long ago, really. And I think the emergence of COVID that again shut down most construction activity for about 6 months in Madrid at that time sort of reinforced this conviction that it's important to have a giant cash cushion here. And I feel that if he were to just talk to bankers, right, in his industry in Madrid, that would probably be what they would be advising him as well, because the entire market has such a negative view of the industry in general. That is why this company trades at net cash, you see, for the past year and a half to 2 years. So I think there's this fear that they have to survive if another big crisis comes. That is why the big cash cushion was necessary. So I think it's more it's more emotional rather than the business has a real need for this pile of cash.
Have you tried to, reach out to management and ask them about this?
Yes. So first, they were not very keen on replying. To put it politely, and when they did reply me in Spanish too, even when I didn't write in English. So and they are just like, my sense of it is that I don't think anybody has contacted them in a long time. And the company is just known to be just extremely private. And this is how private they are. I mean, there is that lack of journalistic coverage about them. And when the CEO of the company appointed his two sons to be like first vice presidents, which is like just second in command relative to his position as a CEO, there were no press releases about it. They merely just filed a notice with the regulator. That's how I knew that the kids were in line to succeed him if he does retire. That's how private this company is, right? They don't say more than what's necessary, really. So my outreach efforts were futile so far.
But don't they want to pay themselves like a massive special dividend or something? They're going to get most of it.
thinking that that would come. That would come, really. At this moment, I don't think that it will come right at this moment, because if you look at the way that Jacinto runs his company, I feel that he's always on the lookout for good investment opportunities out there. So one of the hidden assets that's on the balance sheet is a 10% stake in this large uh, private real estate development
Hmm.
project. The full name is Crie Madrid Nuete North. In short, it's called
Okay.
CMNN, and they own a 10% stake in this. And the majority owner is actually a large bank in Spain called BBVA that owns like about 75% of the project. So that stake, that 10% stake, was bought about 30 years ago in 94. That's how early that stake was bought. And the two other assets that the company owns, it owns a 50% stake in a company that's listed in Argentina that owns 2.2 billion square meters of land. And they also own about another 1.2 million square meters of undeveloped land in Argentina that is prime for real estate development. So if you just look at all these assets on its balance sheet, um, all of which are valued at cost, by the way, not valued at market prices. Um, 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 this seems to be indicative of a CEO who is always on the lookout for investment opportunities. So that might be another reason that explains the cash bill as well, and explains like the lack of special dividends.
I don't know. So the 10% stake, you said it's at book value. Um, so what value do they have that on the balance sheet?
I think it's about 20 million today.
And you think it's worth 250? How do you come up with that?
Oh, so first, this project is a really popular project. It's a higher profile project that has been delayed for many many years, for at least 10 years, really. So what attracted attention was a news announcement in December of 24, when the consortium announced that they have acquired all the land that is needed for this project to proceed. So what's holding them up is the sale of the land from the government's metro authority to this consortium. So that process took a long time and was a major hurdle for this project to work. So at about, I think it's 20th of December of last year, the consortium finally finalized the purchase of this land. And um, when there's such a major milestone for the project is evaluated, is revalued again. So the latest appraisal values the project at 2.5 billion. Now, it is industry practice to do things like this, to reappraise the project as significant milestones, because milestones can come many years since the original appraisal. So since they own 10% of that 2.5 billion, it is worth 250 million. But there is a catch to this. Now, even if it's worth 250, even if it's worth 2.5 billion, the announcement and the appraisal says nothing of the amount of capital that the consortium needs to contribute at this point. And obviously, this is a complex topic, because it depends on as what exactly each partner is doing, right? Like, you wouldn't think that BBVA, the bank, would be directly in charge of the construction projects, right? It's probably a major financing partner of the project, right? Right. So that's the catch to this. How much capital does GSJ need to contribute to actually finish up the entire development of the project? Now, even given this complexity, there are actually many ways for them to realize the value of this project. Because as is with industry practice, they can sell a small stake of the project. Now that the project is on track, now the tallest building in Spain will be in this development area. So the completion of this milestone should attract many bidders for this project. So I think that BBVA can sell a stake in DR since they own 75% of this. GSJ can do the same thing as well. And with every sale, the project will be so-called reappraised again, right? Depending on what the market thinks the entire project is worth. And just even if you just assume that real estate just increases with the rate at the rate of inflation, I think we have seen a pretty good floor for how much this project is worth right now. Even if you apply a discount to it, it's still cheap on the balance sheet. So I think that that's a very, very exciting asset for the company to have.
So the 2.5 billion, is that valued as a completed project or as pre-development?
So I would say that it's definitely not valued as completed. Really. So it feels too small of a value. Why? Because this project has like the same land area and scale of London's Canary Wharf, though. It's not small. It's the largest real estate development in Madrid. So in my view, I think that 2.2.5 billion, it's more like a almost like a conservative estimate so that financing can be done with that number as an anchor. And in the future, it should be worth more. I got right if the development proceeds as planned. Market cap 375 million euros and net cash. So that means cash net of both short-term and long-term debt is about 375 million euros. Now, EV is not zero right here because EV must include minority interest. So as I'm reading it right here, minority interest is about 35 million euros right now. So
Yeah.
that is exactly
Yes.
what its enterprise value is right now. And the construction business we have talked about, the ES3 hidden assets. So there is the 10% stake in CMNN. That's the Madrid development project. It owns 1.2 square meters of land in Argentina that is not developed right now. That's also prime for real estate development. Very exciting because Argentina is on the rise again. Hopefully, it could sustain that. And the third hidden asset is its 50% stake in a listed company called Carlos Asado. The ticker is Cado, like avocado, Cado, Cado. So that's the final hidden asset and a 50% stake in that listed Argentinian company. And Jacinto Reyes, CEO of GSJ, is the chair of that small company. So that small company owns 2.2 billion, not million, 2.2 billion square meters of land that is right at where Paraguay and Argentina meet. Uh, Mostly undeveloped as well. You only see agricultural operations and livestock on it. What they're going to do with it, I do not know, but it's just good optionality, right there. So just to make sure, these are the three hidden assets plus the core construction business that we have discussed. So it is trading at a 52-week high right now. It's probably trading at about 580 euros per share. Right now, it's probably at either a 52-week or a 2-year high right now, and the stock went up after the euro crisis to right before the COVID, and it crashed from there. And then the high interest rate scare came, and every long duration company got hit by it. So given there's a construction company, obviously it got hit. So it got hit again. I think the low in recent years was probably like 350, and this stock passed my screen for cash flow and returns during the high interest rate era where everybody thinks that interest rates would just increase to no end. So that's when like the stock caught my attention. In fact, the recent surge you will see is actually in late December in 24 when the stock surged from 470 to 540. So that 70-cent move was when the consortium finally bought the land from the government, and the entire project was revalued again. So that accounted for like the most recent surge. So the market knows this.
Okay. So I guess, is this unleashing of value just basically a waiting game, do you think?
Yeah, so I would say that there are a lot of ways to win, and obviously one of my core tenets, my investment philosophy, is to focus on certainty and predictability. So I like situations where there are multiple ways to win. Right here. First, you wait for the construction business to do better post COVID, because I think there's still some worry. Right, interest rates are still higher. Right, they're not as high as what we expected, but they are still higher compared to pre-COVID. So I think give it time for the market to realize and understand the growth of the construction business that is not as cyclical once it was. Spain is actually going through a construction boom right now because there are increases in migration, and is emerging as a huge tourist hub in Europe because of nice weather and other things that the country offers that we can go into later. So there are definitely macro tailwinds right there. We have seen the excellent execution of the business. So give the market time for it to realize the core value of their construction business. So that's one way to win. Another way for them to win is, like I've mentioned, for them to just sell a stake in any of their hidden assets. So far, it's common for developers, for owners, to sell a piece of their assets before any other development starts. Uh, and when that happens, the project needs to be reappraised again. So that's another way to win. So that second way to win is itself three ways to win because there are hidden assets in it. And following the sale of any such stakes, I'm expecting a special dividend to come in because um as much as this is the core business is construction, you can see that the capex is not high though. The capex is not high. There are many ways to run a construction company. You don't have to own like the earth moving machinery by yourself. In fact, the best model for a construction company these days is to own the high value talent, the expensive talent. So we're talking about the surveyors, the structural engineers. So these are the two most well-paid people in construction. Own the most high-value talent and rent everything else. Outsource everything else. And you don't even have to manage it by yourself. You can outsource it to smaller vendors out there. So this business is not a capex heavy business. So whenever they have that excess cash from the sale of a estate, I will be expecting a special dividend. I think the company has been paying dividends for a while right now. It definitely did stop during the Euro crisis, and it resumed from there. And I think during COVID, it stopped once and it resumed again. Really, so there is a good track record of dividend payment there.
Okay, that makes a lot of sense. Thank you for sharing this with everyone. Okay, so Marcel, for any of our listeners who have been listening to this fantastic idea that you've been sharing, I'll put your connect information right below in the comments. Or an alternative would, if someone reaches out to me, I can also connect you. So, Marcel, any final comments?
Nothing much. I think I've spoken a lot today. I hope that everybody's enjoyed this presentation of a simple idea. There's a lot to dig into, obviously, but I think the themes are simple enough. Here, I've been in this stock for about a year and a half, right now. So I think that he has plenty to run.
Okay. So, Marcel, thank you very much. You've been very kind to offer this fantastic idea through your hard work for our listeners. And I look forward to hanging out with you next month in Thailand for the first edition of the Fat Alpha Value Asia conference. And hopefully, we'll have many more. So I'll see you soon,
Sounds
Marcel.
good. Yeah, thank you for having me. I look forward to seeing you in Bangkok at your event next month.
All right, take care. The podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.